Marriage is a new phase of life where you share the rest of your life with your loved one. You need to secure your life in order to protect your partner's life in case of eventualities. Max Life Company offers an insurance plan called Perfect Partner Super Plan. As the name suggests, will it be a perfect plan to protect your partner? This video will help you to understand the features and benefits of the plan with a thorough analysis. At the end of this analysis, you can definitely figure out whether this plan suits your investment goals. Welcome to holisticinvestment.in. Max Life Perfect Partner Super Plan is a non-linked participating individual life insurance savings plan. The main features are flexibility to choose your premium paying term, life insurance coverage and maturity till the age of 75 years, money back at 7.5% of guaranteed maturity sum assured per annum for 15 years to take care of your needs from age 61 to 75 years, flexibility to choose your bonus option as per your need. Next, we shall look at the benefits in detail under Max Life Perfect Partner Super Plan. Survival benefit. Guaranteed survival benefit is equal to 7.5% of guaranteed maturity sum assured payable from age 61 to 75 years for 15 years. Next, maturity benefit. On maturity, that is on life insured 75th birthday, the following benefit will be paid: guaranteed maturity sum assured plus accrued paid up addition plus terminal bonus. Death benefit. The following death benefit will be payable: guaranteed death benefit plus accrued paid up addition plus terminal bonus. Guaranteed death benefit is defined as higher of 11 times the annualized premium or 105% of total premium paid as of the date of death or guaranteed maturity sum assured. Next, we shall analyze the advantages and disadvantages of Max Life Perfect Partner Super Plan. Advantages: 50% of the guaranteed sum assured is for terminal illness. 3 rider options are available for additional protection. Flexibility to withdraw the accumulated bonus is available. Next, disadvantages: loan facility is not available. The sum assured is too low. The policy matures at the age of 75 years. You won't get life cover beyond that age. Bonuses are non-guaranteed. The plan is beneficial only if the policyholder survives till the age of 75 years. Next part of our analysis is interest calculation. An investment needs to be assessed with the alignment of risk and return. For that, let us calculate the return for Max Life Perfect Partner Super Plan. Later, we shall compare this return with other investment returns. We shall use the figures given in the company's sales brochure. A 40-year-old male buys Max Life Perfect Partner Super Plan for a sum assured of rupees 5 lakhs. The policy term is 35 years and the premium paying term is 20 years. The annualized premium is 50,915. He receives 37,500 as a survival benefit for 15 years. After that, along with the bonus, the maturity benefit is receivable. Bonuses are non-guaranteed and are declared at the sole discretion of the company. The following scenarios are deposited at an assumed rate of returns: 4% per annum and 8% per annum. These are not upper or lower limits of what one can expect from the policy, as it depends on number of factors including future investment performance. The final maturity amount varies due to the bonus. The IRR under 4% scenario is 2.70%. A savings bank account yields better return than this investment. The IRR under 8% scenario is 5.80%. A bank fixed deposit offers more liquidity and returns than Max Life Perfect Partner Super Plan. Any long-term investment should offer inflation-beating returns. Max Life Perfect Partner Super Plan is a long-term investment offering regular cash flow and maturity benefit to the policyholder. But when we compute return, the returns are not beneficial in the long run. While analyzing the Max Life Perfect Partner Super Plan, we figured out that the returns were not convincing. Instead of investing in this plan, we shall look for other better investment opportunities. We need to fulfill both insurance and investment component. A pure term policy for 5 lakhs cover would cost 9,500. We assume the same sum assured as in the previous illustration. In general, taking an adequate life cover is very important. The policy term is 35 years and the premium paying term is 10 years. In the initial 10 years, 41,415 rupees is available for investment. In the next 5 years, 50,915 is available for investment. For investment, you can choose any instrument that aligns with your personal personal risk appetite. Risk averse investor can choose debt instrument like PPF, and those who are ready to take risk can invest in equity instruments like ELSS mutual fund. The accumulated corpus under PPF or ELSS could be invested in a 7% return instrument so that you can withdraw annually. After withdrawing annually for 15 years, you can exit the investment. This arrangement is to match the survival benefit and maturity benefit of Max Life Perfect Partner Super Plan. The final maturity value under PPF investment is 16.65 lakhs. This amount is invested in a 7% return instrument. After withdrawing 37,500 annually for 15 years, the final amount of 35.86 lakhs is withdrawn fully. The IRR for this cash flow is 6.44%. ELSS funds are subject to capital gains tax at the time of exit. And the pre-tax value is 31.66 lakhs and the post-tax value is 29.26 lakhs. This amount is invested in a 7% return instrument. After withdrawing 37,500 annually for 15 years, the final amount of 70.66 lakhs is withdrawn fully. The IRR for this cash flow is 8.62%. This IRR analysis clearly shows the importance of investing for your life goals. If you invest via an insurance savings plan, you will end up losing both time and money. Here is our final verdict on Max Life Perfect Partner Super Plan. Annuity plans in general provide regular stream of income throughout your life. Similarly, money back policies provide lump sum payment at regular intervals. Max Life Perfect Partner Super Plan neither serves as a money back policy nor serves as an annuity plan. The reason behind this is here you don't receive any lump sum payment nor do you receive lifelong annuity. You receive only survival benefit till the age of 75 years. Moreover, inflation erodes the survival benefit down the lane. Considering all the above points reveals that investing in Max Life Perfect Partner Super Plan is not beneficial to investors under any circumstance. Any investment combined with insurance plan will not serve the purpose. Alternatively, always invest separately for life goals. For retirement, you can build your retirement corpus which serves you during your post-retirement period. A detailed review of Max Life Perfect Partner Super Plan is available as a blog post in our website and the link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming Enlightening Investment Webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.